Another day, another blow to the London Stock Exchange. This week, one of the most valuable members of the FTSE 100 said it would be listing in New York in order to, as the company put it, access the broadest available pool of capital. Astrazeneca said it would float its shares on the New York Stock Exchange by upgrading its existing US equity listing of American depository receipts on the Nasdaq to a direct listing. The firm's shares will now be traded across the London Stock Exchange, Nasdaq Stockholm and the New York Stock Exchange. The news comes as a blow to London, which up until now had been the primary destination for trading of the 200 billion pharma giant's shares. In some respects, it's not as bad as it might be. Cambridge-based Astrazeneca has sought to reassure UK investors that the company will continue to be listed, headquartered and tax resident in the UK, after rumours swelled that the pharma giant was mulling exiting the UK's equity market altogether. But the direction of travel is pretty clear. The decision comes just weeks after the firm unveiled plans to invest as much as £50 billion in manufacturing and R&D in the US over the next 5 years. The investment is set to include a new manufacturing facility in Virginia, its largest ever single manufacturing investment, as well as manufacturing facilities for cell therapy in Rockville, Maryland, and Tarzana, California, as well as a new R&D center in Cambridge, Massachusetts. That investment came just months after the firm abandoned its plans to build a £450 million manufacturing plant in Merseyside, blaming a lack of government support. AstraZeneca isn't the only pharmaceuticals firm to pull back on investment in the UK. Earlier this month, US pharma business Merck pulled out of a planned £1 billion London research centre in another big blow to the government's growth agenda. Merck said it would lay off 127 staff alongside abandoning the construction project, which had been set to open in King's Cross in 2027. The firm warned the UK would lag behind the rest of Europe for spending on health research unless it made conditions more attractive to invest. In a bid to reassure the industry, last week Science Minister Patrick Vallance said the price the NHS pays for medicines will need to rise to support more investment into pharmaceuticals. We must end up with a deal of some sort, Vallance said, because it's in the interest of the economy and it's in the interest of patients. But whether the government is willing to stump up yet more cash to support the NHS is unclear. For everything you need to know as this story develops, head over to cityam.com.